Hello, this is Nick Rach with the Earnings Scout, and I'm going to look at Illumina's earnings estimate revision trends today. And the reason we're picking Illumina is because the stock is crashing down over 25% today on disappointing sales numbers for its third quarter 2016 period. And what we want to point out here is analysts, after the fact, after this 25% drop, after the news, are now downgrading the stock. Many of them are doing so today. We don't want you to pay attention to Wall Street analyst ratings. To our sophisticated clients, we know you know that. We've explained that to you. You get that. But for those of you who don't know, what we want you to do is follow and pay attention to their earnings estimates. And not just merely if their earnings estimates are going up or down. That doesn't matter. What we want you to see is, are those earnings expectations getting better or worse, and can they be sustained? And what we do with the Earnings Scout better than anyone is we're looking at 900,000 statistical data points each week on different earnings metrics that we measure for 4,500 companies, for every sector and industry in the economy as well, determining durability and sustainability of earnings momentum and trends for the next 12 to 18 months. That's what we do. Let's take a look at how we've been recommending the stock for Illumina. We started recommending this stock over the past 3 years at $95. So this is our 3-year recommendation chart. So at $95.71, we were saying to buy the stock. And then right around $240 on July 17th, 2015, we said lock in a gain and move to the sidelines. Because you notice anything after July 17th, 2015 on here, there's no green arrows. We do not tell you to own this stock again since July 17th. So how did we know to get into this stock and ride it up and to get out right near the top? Now, we don't always get you out right near the top, but we're going to show you why we did in this example, and why we created a sell discipline here to eliminate guessing out of your the equation for your investment process. What we're going to do is draw on a line here that's measuring the rates of change to earnings estimates revisions. We call this a zero line. So if earnings estimates weren't moving up or down, this earnings trend line would be right at this black line. The red line on here is the price of Illumina stock. The blue line are those earnings scores measuring those rates of change to earnings expectations. Above this line, that means earnings estimates are going up. Below it, it means the earnings estimates are going down. Now, as we said, we don't care if earnings estimates are going up or down. And in 2013 and 2014, they were going up on an absolute basis. That's not a reason alone for us to like the stock. But when we look at this, the estimates are going up at increasing rates. They're getting better. We like the stock through this period. That's why we were recommending to own this stock back in 2013 and 2014. Then in the beginning of 2015, notice what's happening. The estimates are going up, but they start going up at decreasing rates. All the while, the price kept going higher. This is a divergence in trend that we measure. And what happens here is you have weakening earnings expectations and a rising share price. And this divergence causes little, if any, margin of safety. By the way, when we spot a divergence like this, we're going to say sell right here. And that just so happened to be right at the top. Now, when we spot divergences like this is the exact same divergence in trends that we spotted for .com stocks in the late 90s, for home building stocks in 2007. We spotted this for Apple stock in the summer of 2012, and for biotechnology stocks in the spring of 2015. So this is something that we think is not going to be a sustained trend, and we want to sell that. That's the reason we got out of Illumina stock on July 17th, 2015, and haven't been in the name since. So you need to know when to sell. And for the case of Illumina, following the earnings trends that we measure better than anyone, we were able to do that for clients. So if you're interested in more on Illumina or any of the other 4,500 companies we have in our database, feel free to contact our sales and marketing team at their contact information on the screen, or send us an email to sales@earningsscout.com, and we'll be happy to talk to you about how we can do portfolio analysis for you and help you find the best and the worst revision trends, not over what happened over the past 3 months, but what's going to happen over the next year. Thank you for listening, everyone, and have a great day.